Welcome to our Making Tax Digital webinar. I would like to introduce you to our Making Tax Digital team, consisting of our VAT specialist, Alison Birch, and our cloud accounting specialists, Adam McGowan and myself, Lorraine Whitaker. From the 1st of April 2019, the way in which you submit your VAT return and retain your records is changing significantly. In tandem with this, there are changes to the penalty regime for late submission, and therefore it's really important that businesses are ready for this transformation. Our team want to ensure that your business is compliant with the new requirements and to help you introduce efficiencies into your processes. For more information about Making Tax Digital, please visit our website. If you would like to discuss Making Tax Digital in more detail or require any information about being prepared, please contact your local office or your local partner or the MTD team. So, Making Tax Digital, what is it? Well, Making Tax Digital is HMRC's vision for the future. In the March 2015 budget, the government committed to transforming the tax system through digital technology. They wanted to be the most digitally advanced tax authorities in the world. Digital technology will allow tax to be integrated into business records, meaning doing tax will be easier and less costly. Making Tax Digital, what is it? It was originally broken down into 4 categories: tax simplified, tax in one place, making tax digital for individual taxpayers, and then making tax digital for businesses. Tax simplified and tax in one place has been put on hold due to firstly the general election and now Brexit. Making tax digital for individual taxpayers is in fact in place. A lot of taxpayers have their own digital account which they can access through HMRC's website. The main thing is making tax digital for businesses. So Making Tax Digital for businesses, what does this mean? It means that financial transactions have to be filed digitally on a quarterly basis, then updated after the year end for adjustments such as depreciation and capital allowances. It doesn't affect the way tax is calculated, and it still means people are going to have to pay tax. It means all businesses with a turnover in excess of £10,000, including landlords, will have to file this information every 3 months. Businesses with a turnover in excess of £10 million are excluded. When will it happen? There have been a few false dawns following the Chancellor's announcement. Originally, MTD was to be introduced to sole traders and landlords from April 2018, with MTD for VAT in April 2019. Then, because of the general election and Brexit, MTD for sole traders was moved to 2020. In July 2017, the Financial Secretary to the Treasury and Paymaster General announced that MTD for VAT will come into effect from April 2019. The Finance Bill in 2017 introduced MTD for VAT, and then in February 2018, the actual VAT legislation was published. Making Tax Digital, how will it affect you? The future of self-assessment and partnership returns are in doubt. To file quarterly returns in a digital format will require change in the way you keep records. There's going to be deadlines for filing, putting businesses under more pressure. There's going to be fines and penalties for late filing. However, the good news is that planning opportunities will arise with advice in the year. Now I'd like to hand you over to my colleague Alison Birch, who will talk about Making Tax Digital for VAT.
Thanks, Lorraine. So perhaps before we consider what MTD will mean for businesses, we should consider why it's being introduced. So of the estimated £9 billion tax gap, HMRC believe that £3.5 billion is due to what they refer to as avoidable errors. So for example, errors in calculations when preparing the VAT return. By making businesses automate their VAT processes, HMRC believe that it will reduce the tax gap significantly. So what actually is MTD for VAT? For VAT periods starting after the 1st of April 2019, businesses in the scope of MTD will have to maintain digital records and submit their VAT returns via API-enabled software. API stands for Application Programming Interface, and it essentially means that your systems can communicate with HMRC's. The online portal will no longer be available for businesses that fall within the scope of MTD. So MTD will apply to all businesses over the VAT registration threshold, which is currently £85,000. This includes charities, trusts, partnerships and sole traders. There are limited exemptions, which I'll cover shortly. If a business is under the VAT registration threshold, they can continue to use the online portal, although they can join MTD voluntarily. But once you're within MTD, you can't leave it unless you deregister from VAT. Exemptions will apply in limited cases and permission needs to be obtained from HMRC. So, for example, if it's not practical due to age, disability or remoteness of location to operate an API-enabled software, you'll be able to apply for exemption. If the business is subject to an insolvency procedure, it also won't fall within the scope of MTD. Finally, if the business is run entirely by practicing members of a religion whose beliefs are incompatible with the regulations, they can also apply for an exemption. There will be penalties for non-compliance. Currently, late submission and late payment are covered by the combined default surcharge regime, but there will be separate penalties for late filing and late submission going forward. For late submission, a points-based system will be used. When a certain number of points have been given, a penalty will be issued. The points will expire after a period of good compliance. Both of these thresholds are set based on the VAT return frequency. For late payment, no penalty will be issued if payment is made within 15 days. If payment is made after 15 days, a penalty will be applied. A second charge will be applied after 30 days until the tax is paid in full. For more information about the penalty regime, please see our website. There will also be penalties for not keeping the mandatory digital records, and I'll discuss the record keeping requirements shortly. So what does this mean? Well, it means that information can only be submitted to HMRC via APIs. This can be from software, bridging software, or API-enabled spreadsheets. Some of you may be wondering what bridging software is, and Adam is going to talk through this in more detail later. The complete set of digital records to meet the MTD requirements do not all have to be in one place. They can be kept in a range of digital formats. However, transfer between the interfaces must be digital for the records that form part of the MTD journey. HMRC state that digital transfer can include XML, macros, CSV or linked cells, but does not allow for the manual transfer or transposition of data. Their latest guidance also states that it can include transfer by memory stick or email. Invoices can be stored either in paper or electronic form as they do not form part of the mandatory records. However, by law, some records need to be preserved in their original form, for example the C79 import VAT certificate. HMRC has confirmed that there will be a soft landing period for 12 months, during which the transfer of data between systems does not have to be digital and no penalties will be imposed. However, it is important to note that the soft landing period does not apply to the transfer of data after the VAT return has been prepared. So what records must be kept digitally? So all businesses must hold basic information within their software called designatory data. This includes the business name, principal place of business, VAT registration number and a record of any special schemes, so for example flat rate scheme, cash accounting scheme. In addition to this, records must be kept at transaction level. So for each supply made by the business, it must record the value of the supply, the time of the supply and the rate of VAT charged. Similarly, for each supply received by the business, it must record the time of the supply, the value of the supply and the amount of input tax that will be reclaimed. Businesses must have a record of output values split between standard rate, reduced rate, zero rate, exempt and outside the scope, although this is not required for inputs, only for outputs. This requirement makes it extremely important that the appropriate tax codes are used, and we will discuss tax codes shortly. The VAT account is the link between the business records and the VAT return. The information required to be held under MTD must be held digitally and the software must calculate the VAT return. So again, this is where appropriate tax coding is important. There must be a link between the output tax on the VAT return and the records identifying the VAT on sales, VAT on acquisitions, reverse charges and any adjustments that need to be made. Similarly, for input tax, there must be a link between the records and the VAT returns showing how much VAT can be claimed on local purchases, overseas purchases and any adjustments. There are some exceptions to the record keeping requirements we have just discussed. So for example, a business on the flat rate scheme typically would not reclaim any VAT on its purchases and therefore wouldn't need to keep digital records of the purchases. However, where they are claiming VAT, so for example, if it's a capital purchase over 2,000, they will need to maintain appropriate records. For retailers using the retail scheme, HMRC recognise the challenges for retailers and therefore only a record of daily gross takings must be kept. There is no requirement to keep a separate record of the transactions that make up DGT. The Gold Special Accounting Scheme, under this scheme, the responsibility for accounting for VAT shifts to the buyer and only a record of sales values made under the scheme and the total output tax on gold purchased under the scheme needs to be maintained. Certain adjustments can be undertaken manually, so for example partial exemption, fuel scale charges, corrections to errors on previous returns. These are done outside of the accounting software and then once the adjustment is finalised, this is entered back into the system prior to VAT return submission. As I've mentioned a few times in this webinar, the software must be able to calculate the VAT return and it will do this based on how the transactions have been coded in the software. If tax codes are not used correctly, the VAT return may be incorrect. This is also important due to the requirement to retain a split of outputs by VAT rate. I thought it may be helpful to identify some of the common miscodings we see and the impact that it could have. By far the most common miscoding we see is exempt transactions being coded to either outside the scope or zero rated. Anything coded as outside the scope won't appear on the VAT return, and exempt transactions should be in box 6, even though there's no VAT charged on them. So therefore, if they're coded to outside the scope, that will be incorrect. If it's coded to zero rated, then this could impact the partial exemption calculations, as obviously it would show as a taxable supply rather than an exempt one. Also, purchases that don't have VAT are often coded as outside the scope of VAT. So for example, if you're receiving an invoice from an unregistered supplier or you're receiving a zero-rated supply, if this is coded as no VAT or outside the scope, it won't appear on the VAT return, and obviously it should do because it's still a business purchase and should be in box 7. We also frequently see sales outside of the UK incorrectly classified, and this can result in HMRC expecting additional returns such as EC sales lists or intrastats. So again, it's really important to get that right. So I really can't recommend enough that businesses undertake a review of their data prior to MTD to ensure that their tax codes are used appropriately. And finally from me, getting ready for MTD isn't just about having compatible software, it's about having a compatible process as well. This means understanding exactly what steps are taken to prepare the VAT return from invoice entry through to VAT return submission and identifying whether this complies with MTD. We are undertaking Making Tax Digital readiness reviews with our clients to prepare them for the changes. This involves a walkthrough of your current VAT return process from the moment the data is entered through to understanding how the VAT return is populated and submitted to HMRC. We then identify which elements of your process will not comply with the MTD requirements and work with you to discuss the options available to make your process compliant. We also support you with the implementation to ensure your tax codes are correct and also to see whether there are any apps that could benefit your business. And I'll hand over to Adam to go through these in more detail. Please keep an eye on our website for MTD updates and also for details of the readiness review we are offering. If you have any questions, please do not hesitate to get in touch.
Thanks, Alison. So, from April 2019, you'll need to submit your VAT return using compatible accounting software. You'll no longer be able to submit your VAT return online using HMRC's online portal. So how do we do this? There are over 100 software providers who have confirmed their commitment to being MTD compliant, although only around 45 of these have been fully approved by HMRC at this stage. A full list can be found at the website address on the screen. Sage Desktop will be supported, although only the current version, and you'll need to update the software annually. This can be expensive for those of you that don't already update each year, as costs can exceed £2,000 per annum for some businesses. Sage 50 have also launched Sage 50 Cloud, which is Sage Desktop but with some cloud functionality. This includes saving backups in the cloud and some integrations with Microsoft Office 365. Sage 50 Cloud is charged as a subscription with costs up to £125 per month, depending on the number of users. QuickBooks Desktop is not on the list, but may become approved before April 2019. If you currently use software which is not compatible, it may be possible to use bridging software to make your VAT submissions to HMRC from April 2019. Bridging software usually uses a spreadsheet to bridge the gap between incompatible software and HMRC's new system. You would need to extract your VAT return data from your current system into a spreadsheet format, such as a CSV. This can then be copied into a bridging provider's spreadsheet. Once it's in the bridging spreadsheet, some providers enable direct submission to HMRC. Others require the data to be fed into another compatible MTD system, such as Xero, to make the submissions to HMRC. We're partners with Xero, Sage, QuickBooks, but we have experience with a wide variety of software. It doesn't matter which package you choose, we'll support all of the main cloud products for MTD. However, I would point out that we are platinum partners with Xero. So why Xero? Well, we've tried a wide variety of software over the years, and Xero was found to be the best for all of our clients. They've been around for around 12 years now, which is a long time for cloud accounting providers, and they're a market leader. As they've been around so long, their features for automating your business are excellent, and other providers such as Sage are trying to catch up, having only entered the marketplace a few years ago. So is Xero secure? Yes, it is. If you lose your laptop or your mobile phone, the data doesn't go with it. It's all stored in the cloud. Data is encrypted with bank-level security and multiple firewalls are in place. There's two-factor authentication available. If enabled, this sends an authentication code to your mobile device, which is needed to access Xero. You're notified of any unusual logins if anybody logs in from a different location. You can then change your password. There are also different levels of access for staff to lock down people into different parts of the software that they need to use. So why cloud? Cloud accounting has the potential to save you and your team significant amounts of time compared to traditional systems. Features such as direct bank feeds enable a secure one-way feed of transactional data from your bank account straight into the software. This saves time from manually entering all the transactions. Once the transactions are in the software, bank rules can be created to tell the software where to post things. For example, you could set up a rule which says each time a payment is made to BT, this should be posted to the BT supplier account. There's no need to manually enter invoices or expenses anymore. The cloud accounting providers and third-party providers such as AutoEntry have mobile apps which allow pictures to be taken of expenses on the go, or alternatively invoices can be scanned in batches. The key information is then lifted from the invoice or expense and is automatically posted into the software, saving significant amounts of processing time. A digital image of the invoice or expense is also saved against the transaction in your cloud accounting software. You can quickly refer back to the invoice or expense by clicking on the image. Over time, this will reduce storage costs as paper invoices won't be required. You can run your business on the go from anywhere on any device, such as a laptop, mobile phone, or a tablet using cloud software. You can also send branded quotes or invoices whilst you're out and about from the mobile phone app. You can also track when a customer has opened the invoice or quote, which is a really useful feature. Finally, you can process expenses using the app whilst on the go, so there'll be no more lost receipts. Cloud accounting packages enable you to see your cash position in real time using the direct bank feeds. They also allow you to link up with payment service providers, such as Stripe, GoCardless, or PayPal. Once enabled, the customer will see a Pay Now button on the invoice. When they click on it, they could pay straight away using credit card, debit card, or even direct debit with GoCardless. There are other great features such as the ability for your accountant to access the data in real time and provide support as it's all cloud-based. There are some great dashboards to show key financial information such as profitability, cash flow, or debtor and creditor positions. There are also unlimited users available at no extra cost with most cloud providers. Cloud software is charged on a subscription basis monthly and can be cancelled at any time. It tends to be significantly cheaper than traditional desktop software. Xero have the biggest selection of apps available. There are a huge number of apps available, over 700 in total. Apps enable more functionality to be added to Xero, and they link seamlessly, meaning data can be transferred back and forth to add additional features without needing to key everything in twice. There are great reporting apps available with the key providers being Spotlight and Futurely. While Xero has some great reports of its own, such as P&L, balance sheet, and cash flow reports, the third-party providers allow far more comprehensive management reports to be produced, including graphs and pie charts. Data is transferred from Xero into the reporting apps in almost real time, so the management reports can be created and updated at any time. They also allow the full year of previous financial data to be pulled in quickly and converted into a forecast for the next 12 months, which is a really useful feature. Once a forecast is created, the actual data feeds in automatically to compare performance against the forecast, saving lots of time. Xero has a stock system, but third-party apps such as Unleashed and Dia can provide far more comprehensive stock functionality, such as sales, purchase order processing, delivery notes, and stock tracking, including barcode scanning. All of the data is passed seamlessly into Xero to ensure it's only entered once. Point-of-sale systems such as Stripe, iZettle, and Vend enable payments to be taken at the till, with transaction data then automatically being processed into Xero. Again, this saves lots of time. Financial service apps are available, which can provide valuable cash flow for your business without having to go to your bank. Satago links with Xero to review the debtors ledger and enables specific suitable debtors to be factored. iWalker links to Xero and reviews the data before offering overdrafts or loan facilities. This cuts out the requirement to provide accounts and projections to the bank and speeds up the process of obtaining finance. project management apps such as Workflow Max and Zero Projects enable a quote to be set up for each job which is emailed to the customer. Invoices and costs are then recorded against the quote as the project progresses to track profitability and also improve business decisions. The income and costs are then transferred automatically into Zero to reduce processing time. There's also e-commerce apps such as Shopify and WooCommerce, which enable pre-built websites and built-in payment facilities to provide easy access to e-commerce. Shopify has over 100 pre-built websites to choose from, making the transition to e-commerce a lot more simple. Debtors support apps are available from the likes of DebtorDaddy and Chaser. These apps access the debtors ledger on Zero and automatically chase customers for outstanding debts. This depends on the criteria set in the app, so some customers can be chased earlier than others. This cuts down the time taken to chase debts and can improve business cash flow. So, how do you move? Sage and QuickBooks desktop data can be converted easily using a third-party app called Move My Books, which is free. Other systems may be able to be converted, or you could just start afresh. We have a specialist cloud conversion team at Mitchell Charlesworth who will make the conversion to Zero painless, and you will be up and running on the new software in no time at all. So how can we help? Training options are available, either as part of a group or a one-on-one. Group sessions will be run with some of our other clients, whilst the one-on-one sessions will be dedicated to just you and your team. We can check your VAT returns to ensure that you're MTD compliant. As Zero is cloud-based, we can check your progress and support you in real time too. We have a significant amount of experience in cloud accounting with hundreds of clients successfully converted and trained. And what if you don't want to deal with MTD at all? Leave it all to us and we can deal with it all for you. We have a great team at Mitchell Charlesworth that can maintain your records on Zero and submit MTD compliant VAT returns for you. If you're interested, speak to your local Mitchell Charlesworth office or contact one of the MTD team using the following contact details. So are you ready for MTD? Request your MTD readiness review using the link on the screen. Thank you all for attending this webinar. We hope you found it really informative and we're here to help if you have any queries. Now let's take a look at a short Zero demo just to finish off the webinar. Thanks again.
Zero is beautiful accounting software that millions of people love using to run their small business. It runs in the cloud, meaning you can do your finances using any device, whenever you need to. Zero connects with your bank account so that each transaction comes up quickly and matches up, like it's magic. Zero allows unlimited users, so you and your colleagues can work at the same time from different places. There's nothing to install, upgrades are free, and everything is backed up automatically. There's a mobile app too. It's called Zero Touch. You can use it to run your business on the go. It's very handy. You can send invoices to your clients, and they can pay online so you get the money right away. If you work with an accountant or a bookkeeper, they can help manage your finances. Whenever you need their help, they just log in. Zero also connects to all sorts of popular business apps. There are tools for point of sale, inventory, job tracking, CRM, and hundreds more. Zero. It's a pleasure doing business.